Hi, I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team. Today, I'm happy to be with you to recap the investment highlights from the fourth quarter of 2025. The S&P 500 stock market index of large U.S. companies was up 2.7% for the fourth quarter, and it rose 17.9% in 2025. Stocks of smaller and medium-sized companies also performed well, but did not keep pace with the stocks of the largest U.S. companies in 2025. Non-U.S. stocks did even better than U.S. stocks in 2025. They climbed 5.1% in the fourth quarter and were up 32.4% for the year, as measured by the MSCI ACWI ex-U.S. index. This was just the third year in the last decade that international stocks outperformed their U.S. counterparts. Remember, when we quote the performance of investments from outside the U.S., we're quoting that performance in terms of U.S. dollars. So changes in currency exchange rates impact the performance of investments that are denominated in other currencies. A decline in the U.S. dollar was a significant component of international equities' outperformance in 2025. Those strong year-end numbers paper over a bumpy year for investors. You might recall that the stock market plunged in April after President Trump's tariff announcements. Yet markets rallied in the second half of the year, reminding us again about the perils of trying to time when to get in or out of the stock market. We know it was a rocky year for many American households, too. The latest jobs report provided further proof of a cooling labor market. The unemployment rate was 4.6% in November of 2025, its highest rate since September of 2021. Those jobs numbers and other economic factors appear to be taking a toll on U.S. consumer confidence. Confidence weakened for a fifth straight month in December, as measured by the Conference Board. Many Americans are also worried about price hikes and affordability of essentials. Many middle and low-income households are having a hard time right now, while the highest-earning U.S. households continue to spend strongly, keeping overall U.S. consumer spending stable. This divergence between high earners and middle to low earners is leading some economists to talk about the economy as being K-shaped. Think of the high earners as the line in the letter K going up and to the right. These people tend to be heavily invested in the stock market and are experiencing rising wealth. The line in the K going down and to the right represents pretty much everyone else. Those diverging lines represent the growing wealth and income gap. Federal Reserve officials and other economists have questioned the sustainability of diverging consumer financial conditions. Finally, the U.S. bond market, as represented by the Bloomberg U.S. Aggregate Index, finished the fourth quarter up 1.1%. It rose 7.3% for the full year, which was the best full-year performance since 2020. As always, Wespath will continue to monitor the latest news on investments in the economy and update you on the most important market developments. We're here to keep you informed throughout 2026 to help you achieve your long-term investment goals.